Hey traders, Mike Sir here. Welcome back to my channel. From doing my research on Paul Tudor Jones in my last video, I came across an article on Tony Robbins who says that success is only 20% skill, and I couldn't agree more. Now, many traders who come to me for help feel that they are missing some trading skills or need me to help them develop specific trading strategies so they can succeed in trading. In reality, there is some truth to that, as many traders just don't know what to trade or what skills they want to develop. However, once I help them with developing sufficient trading skills and strategies that they can apply to the markets, it's not the lack of skills or skill development that is holding them back from becoming a successful trader. So in this video, I'm going to talk about the 80% that Tony Robbins says that you need in order to become successful. So let's get started. First of all, let me talk about a popular saying that knowledge is power. Now, in terms of trading, it's half true because you do require a strong foundation of how the financial markets work before you can become a successful trader. Now, it's like knowing the rules of the game before you play the game. But having just knowledge is not necessarily the holy grail in trading. The simple reason is knowledge is potential power. It's the execution that trumps knowledge every day of the week. So for example, if you possess a lot of knowledge about technical analysis and you know how to read charts like an expert, you see an opportunity to buy the stock at a specific price, but you hesitate to buy it because you've been wrong the last 3 times and you lost money on those 3 times. Now you pass on the trade because you want to be more careful, but this time the price moves in your direction and you miss out on a good trade. In this case, you had the knowledge, but you failed to execute. Let me share with you a story of one trader who came to me for help many years ago. Now, he was an exceptional trader and had some amazing trading skills. In fact, he was profitable on 80% of his trades, but overall he was barely profitable as a trader. Now, you're probably wondering, how can that be? Well, I asked him for a copy of his trading records and I saw the problem right away. Now, he was a scalper, meaning that he would profit off of small price movements in the stock, typically looking for a movement of 10 to 15 cents in his favor before he took a profit. Now, he was amazing as a scalper, as he would watch time and sales data like a hawk and enter into a trade once he saw strength or saw weakness. However, the times that his trades didn't work, he would take a loss of between 50 to 60 cents, but sometimes actually take a loss of more than $1 per share. Now, even though he made a profit 80% of the time, his bigger losses, which only occurred 20% of the time, wiped out most of his small profits. In this case, this trader had amazing trading skills, but failed to translate it into profits due to poor risk management. When I first started trading in 1999, I believed that I was a great trader. Now, every technology stock that I bought went up at least 2 to 3 times in value. I knew what were the hottest companies to buy, and I caught on to the trends of the market. It's kind of like the hot crypto market in 2017, or even at the beginning of 2021, where many coins skyrocketed in value and all you had to do was buy and hold. They only went in one direction, and that was up. But for me, between 2000 to 2002, I was a terrible trader as everything that I bought went down. I barely made any money, and the main reason is I didn't have the skills to profit in a down market. You see, all the trading skills that I had were buying strong companies, not shorting or betting on the downside of weak companies. The trading skills that I had at the time didn't match the types of opportunities in the markets. Let me give you another example. Let's just say that you are a trend trader and you are exceptional at identifying price trends. But when the markets have no trend or are extremely volatile on a daily basis, how does your trend trading skills allow you to profit in those situations? Well, the answer is they don't, and that's why your trading skills have to match the right trading conditions for you to make money. As Tony Robbins said in the article, he found that success is 80% psychology and 20% skills. Now, the psychology component that Tony refers to consists of how people are able to grow, improve, and push themselves beyond what they thought was possible. And generally, most people focus on what they're afraid of rather than focus on where they want to go. For traders, they focus on the results of each and every single trade, whether they made a profit or they made a loss. Now, if it's a loss, they fixate on it and keep on thinking of the losses that they made rather than focusing on the next opportunity that can help them offset the losses and more. Tony also says that stress plays a huge factor in your success. Now, trading is not a stress-free profession, as every day your trading portfolio can fluctuate up and down. In addition, there will be days or weeks or even months where you fail to make even a profit on any of your trades. You'll feel demoralized or defeated, or perhaps even think of giving up. I mentioned in my previous videos that there was a time period of 3 years where I was not profitable as a trader. In fact, forget about not being profitable, I was losing a lot of money during those 3 years. But I didn't give up. I kept on improving my trading skills. I learned new trading strategies. I focused on managing risks, and I kept my head down knowing that someday I will be successful as a trader. And that's why it's resilience, persistence, or what we sometimes call gut wrenching, that we can overcome those obstacles. Making money from the markets on a consistent basis isn't easy, and it's the reason why trading is not for everyone. Now, most traders fail or give up in their first year of trading. It's those who continue after their second, their third, or their fourth, or even fifth year that they end up being successful. According to Tony Robbins, our challenges in life are born from inaccurate recollections and false beliefs. Now, 3 of the biggest issues that Tony frequently sees are related to confirmation bias, recency bias, and loss aversion. Now, with these 3 issues, I'll give you my take from a trading perspective. The first issue that I talked about before is called confirmation bias. It's basically a pattern in which traders seek only information that will reaffirm what they already believe to be true. So for example, you enter into trade and you only seek information to confirm that you made the right decision. Now, the way to avoid this type of bias is to seek information that challenges your trading decision. You look for research, or you search out people who disagree with your trading thesis so that you can see the opportunity from a different perspective. The second issue is called recency bias. Now, in trading, it's the belief that your current winning or losing streak will continue, irregardless of what's going on in the markets. So for example, I mentioned earlier in this video that you hesitate to put on a potentially good trade because you recently had 3 losing trades in a row. Now, your previous trade shouldn't affect the decision that you make on your next trade, especially if you are trading a different stock or sector. Now, the way to avoid this type of bias is to have a checklist of the types of trading conditions or setups that you like to trade. Now, if the trade meets those conditions, then you should not hesitate to put on the trade. The last issue is called loss aversion. This is the tendency for traders to recall negative experiences more readily, such as losses, compared to positive ones, where you made a lot of money, and to let those past negative memories, especially when you experience big losses, to shape your expectations for the future. So for example, most traders always remember the big losses that they incurred or the times that they've blown out their accounts. And this has an impact of them hesitating on future trades that they make. Traders let their bad trading experiences affect how they trade in the future. Now, the way to avoid this is, of course, not to incur any big losses or blow out your account in the first place by placing stop loss orders to minimize your losses. Another way is to plan in advance of what you're comfortable risking on a trade and recognize that you won't be profitable on every single trade. This way, any losses that you incur were already planned and never to be feared. As Tony Robbins says, psychology either makes or breaks you, so it's imperative for you to have a robust trading system that enables you to stay on target. Thanks for watching. If you like this video and want to watch other videos, please click on the left for more videos like this and click on the right for the full playlist. I'll see you on the next video.